Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Wednesday morning. Remember, tomorrow is the last trading day of the week. In fact, we have options expiration coming up tomorrow. Today we had ADP. So if you're taking a look at bonds, euro, S&P, you'll see that quirky little 815 candle that just shot the bond yields lower as bonds moved higher. Take a look at that 6E, the euro, which is the easiest and frankly the best way to look at what it is that the US dollar is doing. You'll see that shot up higher as well. That coordinated move tells us a lot, gang. And then finally, what do indices have to say about that? Well, very interesting, right? Take a look at the S&P. So dollar is weaker, hence the stronger 6E euro FX currency. And I keep meaning to talk a little bit about the euro dollar in one of these sessions. We'll probably jump into it in the mastery, and at some point we'll talk about it as well here in Charts and Coffee. But what's really interesting is you take a look at the way in which the 815 candle moved, and subsequently we saw indices are down. So that's a quirky, rather disconnected move in terms of the way we would expect lower yields, weaker dollar to ultimately impact what's going on with indices. And it's been a quirky, sometimes mixed market type environment as we go into the first trading week of the second quarter. Yesterday we had Dow weakness, NASDAQ sort of bullishness, sort of choppy, but sustaining strength, sustaining support. And then, of course, the S&P, as usual, is caught in that tug of war between those two. We've had a quirky week, but this is particularly quirky because normally we would expect bonds moving higher, euro moving higher, to be accompanied by indices also moving higher. That doesn't mean there aren't corners of the market that may not be clearly weak or clearly strong. I'm going to prefer uptrends. And it's not that I'm only ever thinking bullishly. I think a lot of folks will think, oh, Rog, you're always so optimistic. No, it's simply that money has to think of it this way, gang. Money has to flow somewhere, right? I mean, it has to. It's got to go somewhere. It's not going to go under the mattress. If we're always looking for where there's some kind of strength, we meaning collectively as investors and traders, the most predictable kind of market, and you know this because you remember probably what 2020 felt like, the most predictable kind of market is an uptrend. That's our best friend. The next most predictable is a downtrend, although downtrends can be very volatile. And then, of course, no trends are the most volatile of all, where traders who cannot make the adjustment between the way we use, say, the multi-trend and say, oh, okay, this is a market that is now neutral. This is a market that's now up. This is bullish momentum. This is bearish trend. This is neutral momentum, right? We can break it down that clearly. If traders don't have a process to do that, and I mean specific to the candle, right? When something went neutral, when something went bullish or bearish, then especially in chop, you're subjected to really possibly wanting to be bullish at a ceiling or wanting to be bearish at a floor. So there's a lot of value to having a directional bias, because a bunch of lines on the chart, gang, they're always going to look great in hindsight, but we have to make decisions in real time, right? And that's really the key. And let me make sure I change this weekly chart over to a daily. By the way, speaking of weekly charts, my folks from the daily price movement range, the DPMR masterclass, today is our bonus session. We decided to throw in, especially with what's going on in this environment, our longer term position trading, sort of my view of how to manage a portfolio. That bonus session's going on in the DPMR masterclass classroom at 2:30 p.m. Eastern today. We're going to have a 90-minute break down how I look at the market from that longer term perspective. What are the specific setups I look for? And then we'll be taking your questions as we wrap up what's been an awesome daily price movement range masterclass. All right. So when we look at what's happening again with a little bit longer term time frame, it's hard to be freaking out about this, gang. It's hard to look at the last week of March into the first week of April and say, hey, we shot up on Friday, and then Monday and Tuesday, we really remained in that Friday range. Take a look at the YM. Okay, NASDAQ, we shot up, the last week of March. Friday was, especially a move higher, and we've pretty much stayed in the range of that Friday candle. So while we haven't put in consistently higher highs, obviously, always going to be a little disappointing, we have maintained a lot of the strength that we saw not only the last few trading sessions of March, but also that Friday last trading day of the quarter. It's hard to be really bearish here. And it's really increasingly hard to be bearish when we're seeing a little bit more interest in things like healthcare, right? Healthcare as of, and this is what I mean about being specific about the transition from downtrend to chop. On the 29th of March, we broke the downtrend and we went into a neutral environment. And remember, a broken downtrend is not an uptrend, but it is a neutral. So at least starts to open up the possibility that buyers may be willing to start looking at getting long, as opposed to fearing every higher high as a possibility of shorts just stepping in and crushing, the bears coming in and crushing price. We're actually getting above the 200 propulsion on the daily. This is a significantly different look that we've seen in healthcare in a long time. By the way, who does that disproportionately benefit at the index level? The Dow and the S&P. Who does it not help at all? The NASDAQ, right? So think about those sector weightings. Are financials, XLF, out of the woods? They're not, but there are some individual stocks within the XLF ETF that are starting to look a little interesting. So XLF financials are not out of the woods yet. There are a number of sectors that are starting to look quite interesting. Basic materials is another one. I got a lot of questions about housing. Rag, is housing starting to look more interesting? Yeah, housing never looked bad, gang. It never looked terrible. This is ITB. It went into chop, but it's been clearly above the 200 for the year. And if you're ever wondering, Rag, is this more of a bearish environment or a bullish? Get to that stock or get to that specific sector and ask yourself a really simple question. Is price above the 200 propulsion, which for me is a tool that I use in lieu of the 200 exponential moving average. It's the 8 EMA and the 200 EMA crossing, doing some magical things with price. But again, plotting those dots as a self-correcting or smart exponential moving average. By the way, you can download this for free from the room drives here at Simpler Trading. And if you're a TradingView fan, as I am, it is available unlocked. It is available free on the TradingView platform. So check it out. All right, let's jump into the questions. All right. And by the way, 2 important videos on the Simpler Trading website. I always like to make sure, especially for those of you that are on the Simpler Trading YouTube, as opposed to maybe my YouTube, make sure you check out let me just search this here real quick. There we go. Simpler Trading. Head on over to the Simpler Trading YouTube channel, which I would assume most of you are on right now. Head on over to videos, and you will see 2 really important videos that I've shared recently. One is really priming us for what I'm preparing for this quarter. And this is Friday's video, sector rotation for Q2. You can check that out right over at the Simpler Trading YouTube channel. And the other one was last night's free video. Am I still swing trading? What am I doing with the daily price movement ranges? What are we looking for in that 1 to 3 day time horizon? Not day trading, although I love day trading, and we do that every single morning at the Sector Secrets Mastery. But what do we do after we're done day trading? Just persist on day trading all day? That actually is not a really good tactic. It's really diminishing returns. It's not a great return on investment. It's not a really good return on time. How do we free ourselves up to slow the market down, 1 hour or daily time frames, and stay in a trade overnight, maybe 1 to 3 days, 1 to 3 sessions. And that's that swing trading. And so I walk y'all through that in a lot of detail in last night's videos. If you haven't checked that out and you're curious what I'm doing with DPMRs, the multi-trend, the wave, how are we putting that together, check it out over at Simpler Trading's YouTube channel. All right, let's jump into the questions, gang. First up, Johnson & Johnson. Sure. J&J, if we take a look at that one, Jose, and I'm going to move the now notice I've got the day trading HPMRs there if I did want to trade Johnson & Johnson on a 5-minute chart. But I'm going to take a look at the daily and the hourly. The best place to take advantage of this fresh transition in healthcare, which of course is going to affect Johnson & Johnson, Jose. Johnson & Johnson is the number 2 weighted stock in the XLV. I'm going to focus on the DPMRs or mean reversions, retracements to the wave on the 1-hour chart, because that's where we have the green trend. That's where we have confirmation of the uptrend. So DPMRs in the daily or DPMRs in the 1 hour are fine too, or a little bit more aggressively, we can surf the wave. All right, next up, Hope. Did I have bad trading habits in the past? My bad trading habits, I will say, knock on wood, I had some really good mentors, which is why I take my role as a trading coach, a mentor here at Simpler so seriously. I had a lot of good mentors when I was very young. So not really. However, yeah, we all do, right? We all have different ones. For me, probably my worst habit. Because I learned, so let me describe some of the worst habits traders have. And again, I'm very fortunate, which is why in the Sector Secrets Mastery, I spend so much time conveying the wisdom of my mentors and the wisdom of what I've learned screwing up here and there for 30 years. My worst habit, my bad trading habits were probably along the lines of, in the early part of my career, not taking position sizing and scaling in as seriously as I could. It cost me a lot of money, not in losses alone. I mean, I could have had better trades to the upside. So it cost me profits, not taking scaling in and position sizing really seriously, not making that the first most important thing. By the way, I make that the first most important thing in the mastery. That would probably be one of them. But again, I think the worst habits we have generally that I observe, and again, knock on wood, my mentors quite literally just drill this out of me in terms of just, if I ever wandered into trying to predict the market, trying to ask them questions like, where's the market going to be 3 months from now? I was ruthlessly, So, and that's so true. I think a lot of the bad habits are mental ones for traders. They start thinking someone out there knows what's going to happen 6 months from now. They think that we can predict where things are going to go. They don't read the market as it is. And those are things that were drilled into me as a very young trader. So Hope, thanks for the question. All right, next up, what do I think about crude oil? Larry, I am very excited about what we're seeing in energies. Every time we get some sort of OPEC headline, we are seeing more and more about the cartel really, really sticking to the production cuts. Now think of the OPEC, and I don't mean cartel in any insidious way. I mean, that's what they are. They are the central bank of crude. That's really what they are. They're the central bank, and their currency is crude oil. What's really going to be important, Larry, is we need to get above the 200 on the daily, which means I want to see price action establish itself above the 82 major psychological level, $82 a barrel, the 82 handle. That's number one. But in the meanwhile, are there swing trades? No, it's really more about, as a day trader, can I find the zones, right, on the HPMR and fade those, right? Now, here's what's really great. The red zones of resistance, the green zones of support. It's not a matter of having a bunch of lines on a chart and not knowing what to do with them. We always know, if we're building our trade from the bottom up, what's the structure. And this is where I can't focus on a swing. I cannot. Swing could really mean two things. Swing can be a trend follow. Swing can also be an overnight trade. I don't mind to day trade, right, from range to range. I don't mind to buy the gray area if we can get down there, but we may find ourselves shorting the yellow area on the daily as well. So I can't quite trend follow yet, because when you take a look at the multi-trend, gang, we don't have a trend today, not on the 5, not on the 60, and we haven't had a trend on the daily all year. So I cannot swing trade yet, but I'm watching and I'm bullish, Larry. I am bullish. If you're talking about crude, let's also think about XLE, OIH, XOP, because as crude is getting stronger, XLE has broken its downtrend. It's north of the 200 propulsion. There's a lot to like about that corner of the market. All right, Stephen, looking to short KRE. If you want to short KRE, I'm with you, right? If that's what you want to do. And what I will say is focus on the resistance of the yellow zone of the daily price movement range, like we did yesterday, like we had on, well, let's see, we had this yesterday. I haven't been trading KRE, Stephen. So straight up, it's not something that's been on my radar, but there are shorts to be had. Shorts on the 27th, the shorts on the 30th, shorts on the 4th, but there have been buys too, right? We've sunk into different buy ranges, but are we allowed to buy? Because you might say, Rog, aren't these buys? Take a look. Those are levels. You're absolutely right. But am I allowed to buy? Those of you that know how the multi works, right? How the multi-trend works. Red means no buy. So it's short only. I'm with you there. I would say keep an eye on the resistance around 44. It's actually 43.30 to 44.13. I'd keep an eye on that zone for that. As far as GDX, gold is bullish. And if gold is bullish, then it's easier to be bullish in things like GDX, GDXJ, NUGT, all those very popular gold mining ETFs. Keep an eye on XME as well. Gold is in an uptrend. GDX is in an uptrend. One of the things that we were talking about in the Sector Secrets Master yesterday was if I'm going to be playing oil services or oil stocks, I better have a really crystal clear reading on the commodity, right? In this case, crude. With gold, once I get the clarity on gold, GC, GLD opens up, GDX opens up, even XME to a certain degree. Keep an eye, and this is the opposite of KRE, gang. This is how easy this is. Green multi-trend, that lower row, all we will focus on is the DPMR for a buy, and that's it. Now, the wave is still down here, and that's a mean reversion, but notice we're not even making it to the 21. So for those of you that like to use the 21 exponential, I do too. I just use a propulsion in lieu of the 21 EMA. It's just better. Again, self-correcting, smart exponential moving average, where I'm taking advantage of the 8 crossing the 21, interacting with price, and voila, that's what gives me dots or no dots to validate whether a 21 EMA pullback is valid in a buy. But we're not even getting down to that level. So for those of you that have been saying, gosh, Rog, I can't even get a 21 EMA pullback. I hear you. And that's where the DPMRs have really been shining. That's where using volatility to automate the ranges that we see every single day. Notice these update every day, right? And that when we can find those ranges, well, what are we going to do? Right around 220. If we can get down there, that'll be the next zone to buy. On Thursday, we'll have another subtle shift in the DPMR, and that could be a series of either alerts or limit orders you can place in that already visible zone. That's what makes it so powerful. So yeah, I like the long side, Stephen. I am absolutely with you. NVIDIA has been absolutely one of the strongest corners of tech, period. Do I want to be a buyer? Absolutely. DPMRs are really, really valid. Now, there's another subtle level in the DPMRs, which is this dashed line. This is an uptrend, but this is actually a low volatility uptrend. What do we do when we have low volatility? Clearly, we want to be buyers, right? Long call only or long stock only, right? But when we have low volatility, we have this dashed line. That's part of the DPMR. It's actually part of the HPMR as well. And right now, that's what's working on NVIDIA. All right. So as always, gang, thank you so much for being a part of Charts and Coffee. We're here every morning, 9 to 9:20. I will have a Charts and Coffee on Friday. It'll be a great way to talk about what transpired during non-farm payroll. And I am planning on doing a non-farm payroll session because I know it's Good Friday, but that's a significant macroeconomic release. And so stay tuned. I'll get you some updates on when and where we're doing that non-farm payroll session this Friday. All right, gang, be good to each other. I'll talk with you soon.